Good morning, trading world. It is August 16th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. It is also 7:39 a.m. on the East Coast. Today's pre-market is about momentum, algos, slopes, and patience. Let's take a look at how these four things are critical right now to your trading success. Most traders now are momentum style traders. They need to go and flow with the current momentum to have any success. Momentum strength can be seen or judged by the slope of price action. So when I say slope, this or the angle at which price action moves is what I'm talking about as far as the slope. And the steeper the slope, the stronger the momentum. So you can see right here we have pretty strong momentum. Anything I think it's 45 degrees or better. I wish I can't change right now to get the trend line out that it actually show the actual angle, but visually you can see anytime we have a stair step up or a steep slope, that's strong momentum. Now, price action with steep slopes with thin volume are prime environments for algos. Algo traders are great at connecting the dots or placing trades in the right place to keep trends going. Because of algos, you have to understand that oversold is a condition and not a trigger. A trade trigger is any event that alerts you that it is a good time to put on your trade. There are many different trade conditions, but for the purpose of this conversation, we'll stick to four: overbought, oversold, expansion, and consolidation. Those are considered trade conditions. Now, in the new world of algo trading, conditions can last an eternity. Now, in the old world of trading, you could see a stock in a condition of overbought and build a trade based on the condition, and eventually it will pull back and cycle back to oversold before too long. Now, it is not enough to be overbought, because now overbought is only a signal of strength to algos. And algos like to buy into strength, whereas we like to look at overbought extremes as places for reversals. Algos look for momentum plus slopes at extremes as a place to continue the trend or continue the buy program or sell program, whichever they were doing at that time. So how do we protect ourselves from getting suckered into selling when algos kick on or continue these buy programs? First, you have to have a lot of patience. And the newer you are to trading, the harder this task is to master. Second, algos do not function well in non-sloped environments, so we must wait for price action to flatten out. See, and we look at something, even though this is overnight trade, you see how price action is flat here, flat here. We're waiting on places like that to even consider trading. Third, momentum must be gone. Indicators that track trend or momentum need to show that momentum has stopped in the current trend. Things like the MACDs and moving averages should be flat or no slope. So this is the other thing that you're looking for. On the MACD, it is a trend tracking indicator. So whenever you see the MACD lines exploding up like that and one is moving away from the other, that's evidence of strong momentum. So this is not a great time to look for a short. Whenever you see those lines pulling apart like that and heading up. For those of you that have followed for a while, I listed one of my primary rules. It's never short an expanding MACD to the upside. And then conversely, never get long or waterfall looking MACD to the downside. So these are things that you have to look out for. Now last, you should see extreme contraction in range indicators like ATRs or Bollinger Bands. And here's an example where the Bollinger Band, even though it's overnight, you see the contraction here on the Bollinger Band. This is what we look for to let us know it's a good time to think about putting on a trade. So for me, I have to have a condition. If I'm looking for a short, I have to have a condition of overbought. And then I have to have a trigger. And a trigger would be something like the MACD crossing over to negative momentum, or the RSI crossing over and turning negative. I want to go back for just a moment because I talked about how at extremes we like to look for reversals, but algos like to look at extremes plus slope, and that's just an invitation for them to continue the current trend. And an example of that would be here, where on the RSI we're at an extreme. This would be considered overbought, and we hit that extreme, and yet algos continue to buy. Continue to buy because it's not the condition. There's a saying that the market can what is the saying? The market can stay, I can't even think of it right now, but it's basically where the market can remain in this crazy state much longer than your account can stay solvent. And so that's how we have to look at these conditions now. Just because we enter a condition of overbought or oversold, that doesn't make a trade trigger, because we can stay in that condition almost eternity nowadays. So without these things, you're setting yourself up to get blown out of a trade. So again, those 4 things: we got to have patience. We got to look for momentum to dissipate, and that's often seen by the slope or flattening out of both price action and your indicators. And then we need to see contraction of the ATR or Bollinger Bands, or things that track range, before we look to enter a trade. That's my diatribe for the morning. Let's get to the key levels to watch for today. Alright, here we are back with the key levels to watch for today. Starting on the resistance side, we have our jack resistance at 428 to the 429 area. And our queen resistance is going to be 430 to the 431 area. This area is going to be highly contentious today. Watching to see a rejection off in between the jack and queen resistance area today. Our king resistance is going to be the 432 to the 435 area. Now, on the support side, we have our jack support, 427 to the 426 area. Queen support, 425 to the 424 area. And then king support, 423 to the 419 area. The main thesis for today is bearish, closing below the 428.86 with a projected target low of between 427 and 422. Our alternate thesis is bullish, closing above the 428.86 with a projected target high of between 428 and 434. The current major channel we are in spans between 425 and 453. With that, let's bring up the scenarios of the day. Alright, our first and most probable scenario is going to be our expanded range day. I don't know why I kept the expanded. It's pretty much going to be a range day as far as I see. But we could look to set a decision area high boundary around the jack or queen resistance area before chopping back and forth the rest of the day. So we're going to chop back and forth, and then we're going to have a pretty good run on one of these legs up that's going to take us a little higher, possibly into the 430, maybe 431 area, before coming back and chopping back down. So with the range day, I know it's been a while, but most of the time you see expanded range day. And there's a difference, although it's slight, between expansive range day and the regular range day. Usually with the expanded range day, there's a bias. We could have what I consider a bear biased range day or bull biased range day. And that's just where the range day takes on a tilt, where instead of being symmetrical and bouncing back and forth, the bounce back and forth actually goes somewhere, whether it's a bullish tilt, we bounce more to the we chop back and forth more to the upside than the downside, or the opposite of that would be a bearish bias, which means we would chop more to the downside than upside. That's the expanded range day. The regular range day is more symmetrical. We chop more in a defined range. We can kind of define a high, a middle, and a low, and be chopped back and forth between that a majority of the day. So I'm looking for more of a regular range day today. Alright, the second scenario to look for today is going to be our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area and find our midday chop around either the queen or king resistance before spending the same energy we used going up to come back down the second half of the day. Also, with the rounded reversal, I like to put a vice versa alert on there that would look something like this, where instead of getting that continued push higher off the cash open, we would see a continued push lower. And that continued push lower would take us somewhere down here, where we would find our midday chop around either the possible queen or king support area. And then the second half of the day, we would see our push up with the same amount of force that we came down with in the beginning part of the trading day. So that's our rounded reversal day type structure. Alright, our last scenario is going to be the trend day down. We open gap down and start with a pop back up toward the previous close, represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the morning. We find our midday chop either around the possible queen or king support area. And then usually or often we have a head fake to begin the second half of the day, like we're going to continue the dominant trend of the morning. And then we usually see some type of rally, no matter how slight it is, but or pop back into the close. Today, since we're so close to the line, I'm going to put a vice versa alert on that, and let me check the calendar. Because there are a couple reports that come out at 8:30 this morning, housing starts permit, and it's like another CPI, which could kind of change the trajectory of where we start from. And if that happens, we could or likely see a trend up day, giving us the vice versa alert. So somehow we could come here based on the 8:30 report, which would start us in a gap up scenario, and we would see a fade back toward the previous close, but we would find support on or before that previous close, and then we would hit our golden window and find our midday chop around either the possible queen. We'll say it's more likely to find it around the queen resistance area today, and we could find that head fake to begin the second half of the day, like we're going to continue the dominant trend, and then we could get our fade back into the close. So those are all the scenarios that I'll be preparing for today. I hope this helps, especially I know a lot of people probably have gotten ate up over the last couple of days with these days that kind of start off like a range, but then we have a breakout, and it's all of those things that I kind of mentioned beforehand when we're looking for the reversals. And quite often when more people are looking for trade to go one way and we get that breakout the other way, those are going to be your more explosive trend days, kind of setting us up for these different squeezes and whatnot. So you have to be very careful, especially a time like this when, you know, trade or the time frames in control are your larger time frames. And today has been the first day in a good while that we've started where the hourly is actually the time frame in control. And we're looking at the hourly in control, and then second to that is the 30-minute, then back to our weekly. So again, I hope this all helps. Your most important job as a trader is to protect the capital that you already have, and we do that by knowing and understanding the risk that we have on in each position and managing that according to your account size. I'm going to close today's pre-market out, as I do always, wishing you a positive trading day. Have a great one.